February 2026. Stocks are pretty mixed overnight, I've got to say. Really, we're coming off a long weekend in the US. We've got a fair bit of data coming out. We've got Federal Reserve's January meeting minutes, industrial production, durable goods, trade balance, PCE, and Q4 GDP data coming out, which all could, move the needle very much so on further rate expectations. So a little bit of wait and see from investors. They're also sort of dealing with that, with the SaaS apocalypse, which is really hurting these, these software stocks. The IGV ETF's down around about 30% over the last probably the last 3 to 6 months. And, we're seeing companies like Amazon as well since February, over the last sort of month and a bit, down around about 18% on their, concern over their 200 odd billion proposed capex for their, for AI-driven products and things. So, that's going to put pressure on their free cash flow. They're all issuing debt as well. So a little bit of a move away from, from the very rosy Goldilocks picture we had for AI, for over the last 2.5, 3 years, into a little bit more skepticism. Skepticism is probably warranted for some stocks, but not for others. So at the moment, there's probably some pretty good opportunities in terms of the whole sector's being blanket sold off, rather than there being any sort of in-depth selection. So, but yeah, we'll see that sort of settle down over the course of the coming month or so. But there will be some winners out of this that have been sold off as if they're going to be losers. So, yeah, keep up to date in terms of which ones those will be. But a lot of them here, AppLovin, the cybersecurity guys, Intuit, CRM, ServiceNow, still under a fair bit of pressure there at the moment, and it doesn't seem to be stabilising just yet. I wouldn't have thought so. In terms of the indexes, I mean, really, the S&P eked out a small gain, as did the Dow. The Nasdaq was down, the Russell was flat, so not much really going on, I've got to say. And we really, Hang Seng had a bit of a bad day yesterday. Aussie keeps grinding higher, probably led by BHP, and good earnings result. So just for clarification, BHP is now a copper company with an iron ore department, not the other way around. That's how they're even pitching themselves on the AFR. They've had ads already come up today on the Financial Review, promoting themselves as a copper company. But look, BHP is really getting ahead of the game. That potash operation they've got's on schedule as well. They foresaw the supply squeeze, in copper. So it's pretty careful planning, really, over a long period of time, which I don't believe BHP gets much credit for these days, but mainly because they've done such a poor job of it decades ago. But I think the new CEO doing pretty well. Bit of a slide in all the precious metals. Yields are heading lower in the States as well. Yeah, so we're really gold down 3 for the week. Silver continuing to fall. Copper drifted off, but yeah, we're having a little bit of a breather in that part of the market there at the moment. Coal sort of continues to head higher. That's largely driven by China, which usually is a good precursor to economic growth over there. Uranium and Bitcoin sort of stabilising, but nothing really too major to report there. So at the moment, Palo Alto did report earnings after the bell as well. They beat on top and bottom lines, but their outlook was a little bit weak, so they're down around about 6%. NAB's reported this morning. Overall, pretty decent numbers. EPS trajectory was a beat. Dividend per share and NIM were about flatter, in line. Costs were better. Growth was better. Valuation, yeah, I mean, still probably a little bit overpriced, but that's against broker expectations or broker valuations. And look, the premium, they don't really price in the premium that the market gives the banks overall, which sort of means that realistically, valuation being a negative there is more so, them not adjusting to market sentiment and overall. So, but yeah, the underlying profit grew 12%, nudged up about 2 basis points in NIM to 1.8. Revenue rose 6%. Underlying profit was particularly notable, that 12%. As analysts they only expected mid to high single digits. CET1 ratio, or the liquidity ratio, was slightly worse than expected, which is a little bit concerning, but nothing much. And they reiterated their FY26 guidance, targeting productivity savings of over 450 million. So not a bad one, but you can get all the full details at Mosaic. You can probably just click through the articles on that are on social media. You'll see them today. We've had quite a bit of good feedback on those that we've been pushing out over the last couple of days, so we'll keep them going for sure. Everyone's a little bit late this morning, I've got to say, in releasing their earnings. So Suncorp, we've got Suncorp, Netwealth, Santos, Iluka, and Mirvac. Santos not out till 11, but we didn't really have time to get full briefs on these. But Iluka swung to nearly a 300 million net loss from a $231 million net profit a year earlier. Weaker mineral sands conditions, 560 million in impairments and write-downs, so that's not very good. Netwealth swung to a half-year loss of 2.2 mil. Costs of settling with the regulators, refunding more than 100 million to the victims of the First Guardian Master Fund collapse. It did report a $57 million profit a year earlier. But, probably not great for Netwealth shareholders, but I think that, that move from the regulator to do that and really make sure that these guys and all of us in the industry are held accountable for not just letting, anyone who's doing, dodgy practices be promoted. So I think it's a good thing that those sorts of companies are just getting weeded out. So Mirvac, 5% rise in half-year operating profit to 248 million. Property Giant also stuck with its earnings guidance for the full year. Suncorp, first half cash dropped to 270, about a third of the 828 last year. But 9 natural hazards or natural disasters, or what they, catastrophe claims, 71,000 claims, net cost of 1.3 billion. They did have an awesome run there. Well, we all did, basically, in terms of not having those catastrophe fixes. So I think it was the best 5-year run the insurance companies have had. So it was always, from a historical average standpoint, was always going to come back at some stage. If you're looking for some calm and some decent consistent returns, we've got our fixed coupons on at the moment. We'll close this week, and then in the coming couple of days, we've got banks around the 9.5% to 10% mark. ANZ, CBA, NAB, Macquarie, cash just paid directly to your bank account of choice. Sophisticated investors only, unfortunately. We can't do retail. And an ASX sort of blue chip or high quality. So we had JB Hi-Fi, which reported well yesterday, 0 and Hub24. So go to mpcmarkets.com.au/fixed-coupons. Realistically, today is probably going to be the last day, if you are new to MPC Markets, that you'll be able to get in, because we'll have to get an account set up for you. But if you're interested in just some calm and consistent returns, these things are the way to go. So do yourselves a favour, have a look at MPC Mosaic for recommendation services, content, podcasts, education, news, all in one place. It's available on desktop, App Store, Google Play. Just scan that QR code there. You get your first month free, and for a limited time, it is for less than the cost of your daily coffee, really, at $149 a month to get all 4 recommendation services. So scan that or go to mosaic.mpcmarkets.com.au and sign up now. But hopefully, this earnings season still been a little bit patchy. If you miss and the momentum's against you, it's been obviously not very good at all. But there has been some fairly rosy results as well. So but yeah, keep up to date via Mosaic, and I think the SPY's showing up around about 43 points at this stage from the overnight. So we probably should start the session relatively positive, and then we'll see what goes on from there. Santos is around about 11 o'clock as well. That we saw. There was also a positive announcement from for Telix Pharmaceuticals, which will be nice for long-suffering shareholders. But yeah, so I will speak to you all tomorrow. Have a great day.